Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, September 16th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here that price has opened with a gap down to begin trading here in overnight trading and heading into RTH, but that is allowing a bit of a discount here, a pullback after the recent rally, and that could provide another buying opportunity for a continuation higher through the 30-29 halves and perhaps even beyond that zone. Again, 29.80 very important here, but down the line 29.50 is still the most important key level right now, and this is the zone here where price broke through that area, and now the pullback to it was defended, and now we're seeing another similar type of price action right now with this pullback into the PEMA trigger zone. And whenever you get that type of price action there, this pullback after an initial breakout from a range, that pullback tends to be a high quality opportunity for a continuation higher. All right, let's take a look here at the NQ. All right, the NQ is seeing very similar price action as well. We had the breakout from the narrow range to the upside. The initial retest in the trigger zone was defended for a continuation. Price hit the FOMC key level from July here and then returned back down again. We are inside the PEMA trigger zone. You see price has already bounced from the overnight lows, and that could provide a very nice bounce and continuation toward 80.50 to 8100. So this pullback right now could be a fantastic buying opportunity if price can continue to hold today's lows throughout the session and can continue to trade at or above where we are. That could be a very nice continuation play. If there's a failure to hold 7800, that's what breaks the whole thing. So getting back below the 7800 level right here, that would suggest a failure and a continuation lower. All right, let's take a look at crude oil. Now the price of crude oil surged significantly here in overnight trading here as Saudi Arabian crude oil facilities were attacked by drones. That is now taking out about 5% of the world's oil production, and that alone here has led to a giant gap up. We closed in the 54s on Friday. This thing gapped up to about 61.5 or so, rallied as high as 63, and then has now pulled back some here ahead of RTH open. This is going to be very significant here. The 59 level, 58.5, that's your FOMC key level here. It returned to hit it here, and breaking through that line so far, that has been the pivot. So when it dropped back down, it's holding, and now it's still above that zone. I think if there's a failure to hold the 58.5, that could lead to a gap fill back down. But right now, price is still holding nicely above that 58.5. Anytime you get a gap of this nature, there could be a couple of ways to go. It could be the beginning of a continuation, or it could just kind of lay low and it has its range now and kind of trade sideways at these highs. So again, 58.5 is going to be the key level to watch there. All right, let's take a look lastly at gold futures. You'll see gold futures here has continued to be in a very clear bullish uptrend. This one has pulled back here after the recent new highs for the year here. And this is new highs that were reached this month. It pulled back and was not able to bounce. It tried to bounce again and failed and got rejected at the previous month's close price. This is very important here because, again, if price gets a breakout or breakdown through the 1490 level after this lower high, that could open up quite a return back toward 1400, 1480. So this was when we had the initial rally on the first trading day of August, and price rallied very nicely to new highs, eventually getting as high as 1566. Well, now we have this kind of rounded top formation, maybe a head and shoulder type of pattern that you want to call it. Over here you have the previous month's close that was resistant or support and has now become resistance after failing back below it. This all suggests that there could be a little bit more of a return back down, perhaps to wipe out that initial move higher. So failing to hold 1490 would open up perhaps another 80 to 90 handles of downside price action. Now again, Where this one breaks is if this is able to reclaim the previous month's close price. If price can get back above that zone, then we could forge higher. So right now, just if it continues to stay above 1490, then perhaps we have a little bit more sideways before the next move occurs. All right, that is it for now. We'll see how this plays out the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.